You know, when it comes to sales and earnings surprises, it's been pretty solid all across the board. What's been your biggest takeaway so far?
So kind of more of the same, really. So for the last several weeks, I know.
Spice it up for us.
There are a couple of things that I want to get to, but it's not in the current earnings season, right? The current earnings season is just beating expectations, as expected. 9 of 11 sectors beating expectations. We're still producing double-digit growth. That's very similar to where we were in the first quarter. If you're looking for risks, there are a couple of things that are happening beneath the surface. And there's one thing that stood out to us, and that is the rate of revisions. So if you look at the forward 4-quarter estimates, they did fall 0.8%. Not horrible. But fourth quarter specifically stood out as an area where analysts are taking down those expectations, and specifically for the consumer, which tells us, maybe our holiday season forecast is already at risk. Maybe our expectations that this consumer is going to bounce back, that wage growth is going to produce a much better consumer outlook, is a little bit too robust for the consumer to sort of hold up to those expectations. And that's the only thing that I can say in this earnings season that has disappointed. Everything else has been pretty strong, pretty stable. Top line, bottom line, excluding buybacks, you know, you can take your go at trying to hit at earnings, and there's just really not a lot of weakness there.
I have to think about the auto sales that are coming out this week and whether that will really weigh into the expectations for the consumer. And, you know, Russ, I'd love to bring you in on this. How concerned are you about the weakening consumer profile that we are seeing within the auto loan sector? Particularly.
I think there is a little fragility, and probably the auto sector is arguably further along than other parts of the consumer market because they were an early beneficiary of low rates. When we look at the consumer, I sort of see the same thing we've seen, a consumer that's doing reasonably well, but not as well as the confidence numbers would suggest. And I'm curious, when you think about the fourth quarter numbers, is any part of that related to some growing skepticism about tax cuts?
It doesn't seem to be the case. Most of it is autos, as Lisa pointed out. It's auto sales, expectations falling, and still falling. So even though for now 6 months we've reduced our expectations for auto sales, the expectations for those companies to form some kind of bounce back are fading very quickly.